Hello traders, Cousin Vinny coming to you from theclosingprint.com, May 30th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices and sectors, all of our indicators, together mostly bullish this week. The follow through pursuant to the pickup in call activity that we saw, in addition to volatility compression. That close that we saw above 4,100 likely signals a continuation of the rally into this week. And we are highlighting that 4,300 level on the S&P 500, where that JP Morgan collar resides, as the maximum upside as we start trading tomorrow. With 16 indicators bullish, 3 neutral, and only 1 bearish, we could see a follow through, as futures are currently alluding to, with all sectors participating last week in addition to small caps, along with the international markets, which are still improving. Support is at 4,000, 4,100 for the S&P 500, resistance at 4,200 and 4,300, with the vol trigger at 4065. With this bullish sentiment coming into the week, we'll start off looking for confirmation from institutions before getting too aggressive. The S&P 500 is up over 9% from the most recent lows. As we start this week of trading, maximum upside, we're looking at that 4,300 JP Morgan put leg strike as the area where we would most likely run into resistance. We also see the 50-day moving average, the green line, right in that area, along with previous areas of consolidation that will most likely be met with some supply. RSI did move above 50 for the first time in several weeks, indicating the strength of trend is improving. Growth and value stocks rallied together. Value did see a lot of interest in the beaten down sectors, especially industrials, financials, with energy leading. The Qs benefited from semiconductors, tech, software, and hardware, rallying after a 32% drop from this year's 52-week highs, rallying off this low at 280, already pulling back more than 32% from all-time highs. RSI is rising. We'll look for that to improve. We had 4 distribution weeks coming into last week. MACD is turning now on this weekly time frame, and stochastics is rising. This is a pretty nice setup for a move back to at least 340, I would say, which might coincide with the 4,300 level on the S&P 500 when they both get to the same level at the same time. We'll watch for some confluence. Many retail stocks that also trade on the NASDAQ were up, with the positive delta trade that's quickly becoming less positive as we approach 4,300. That said, many of the retail stocks managed positive gains last week. Ulta was up over 23.9%. Software stocks were also higher, with Microsoft gaining over 8% for the week, with Apple up almost 9%, Tesla up 14.4%, while small caps also participated as breadth improved. The Russell 2000 was up over 6.5%. With that in mind, many of the small cap stocks like Livent Corporation, which produces lithium compounds for use in applications that have specific performance requirements, that was up over 21% last week. It also showed up on the MarketSmith Blue Dot scan, indicating that we could see a breakout and a follow-through, having pushed above that pivot established back in November, as many of the small caps continue higher. We also saw breadth improving markedly last week with the NIMO printing 105 and change, an extreme that could bring in some profit taking, most likely will. We did see the S&P 500 advanced decline percent moving from below zero line minus 30% up to plus 37% to close the week. Mid caps, similar performance, with small caps and the NASDAQ nearly tagging 40%. When you hit these extremes, we start to look for profit taking and a potential pullback. Like the last time this moved above plus 30%, we were challenging the 200 period moving average on the S&P 500. My suspicion is that now we have the 50-day and that JP Morgan put leg at 4,300 is going to stall price if we get there this week. Given the improvement in breadth, we also saw the New York Stock Exchange, 2,700 stocks, printing more new highs than new lows last week, moving above the zero line on Thursday and Friday for the first time since mid-April. Additionally, we will start off the week with a green signal on VIX, which is suggesting a continuation of these higher highs and higher lows unless VIX starts to spike, with all of these assumptions needing to be confirmed on Tuesday when we start trading. The bond stock ratio is also bullish for equities as this drops off in the lower panel as price action bounces out of this descending pattern. We could see more upside if the bond stock ratio drops more this week. Do note, however, how the 65 period moving average is starting to flatten out or change direction, like we saw back in 2018, 2019, into 2020 before resuming the downtrend again late in 2020. So it's this flattening or change in direction that we're focusing on in the weeks to come. There is still a possibility the markets could move lower. So for now, the bond stock ratio is bullish for equities. Additionally, while the Fed raises rates, we are watching the 3% level on the 10-year yield. Back in the early 80s, we saw very high rates on the 10-year. We've been in this descending pattern since and currently consolidating near that 2.7% level. Also a little bit more bullish for equities if this continues to consolidate for the next couple of weeks. Coupled with what we saw with junk bonds and high yield corporate debt last week, higher is bullish for equities, lower is bearish for equities. As you can see, this peaked prior to the S&P 500 when junk bonds and high yield corporate debt started to move lower, leading to a 5-month long downtrend. Therefore, if we see junk bonds and high yield corporate debt moving higher this week, that would be bullish for equities. The US dollar also did its part, fading over the last 3 weeks as the safety trade unwinds, with other currency pairs like the British pound US dollar improving versus the dollar, all of which facilitated a positive response by metals, especially economically sensitive metals like copper, continuing this bounce for the last 2 weeks, which in turn facilitates a positive response in the builders and construction markets. As copper moves higher, that's bullish for those equities. Looking for a follow-through this week in some of these builders like Toll Brothers, Lennar, KB Homes, Beazer Homes, TriPoint Homes, maintaining a persistent bid Wednesday, Thursday, Friday on above average volume, indicating that institutions have been accumulating shares. As this base completes, you can see phase 3 distribution over here in December, marked down into April, in which case we started to move sideways, the moving averages and price action, completing a accumulation or phase 1 base, presumably starting phase 2, where institutions let these stocks get marked up as they start bullish trends. Gold and silver also showed some bid in the markets. We're looking for those to continue higher. With the dollar moving lower, these metals priced in US dollars should continue to move higher. So we'll keep an eye on gold and silver this week as well. All things considered, we do need to keep an eye on energy, crude oil, and commodities. As you can see, energy continues its persistent bullish trend, looking for an opportunity to short or for weakness to come into this sector. So far, the trend continues unabated. The same goes for crude oil, continuing this bullish trend. Volume started to come back a little bit as we watch for any bearish divergences in RSI overhead, with an additional caveat for the bulls. With this continuation and the CRB index, commodities continue to rise rapidly since March of 2020. And as this trend continues, it keeps us on our toes and a bit cautious for its inflationary implications going forward. We noted a profound change in the sector heat map last week as we proceeded over the last 6 weeks from crimson red to oranges, lime greens, and finally last week confirming what we're seeing in the sectors as well as international markets, with all improving. With the spider sectors in mind, if we continue to see this bullish bid in the markets, that would confirm a retest to that 4,300 JP Morgan put leg area and the 50-day this week as a possible scenario if futures stay strong into the opening bell. Additionally, I'll be watching very closely how consumer discretionary does, XLY. If that continues, we pushed above the 21-day and heading towards the 50-day. With all the sectors looking similarly strong, the consumer discretionary is the one I'm watching most, considering consumer credit and all the conversations about that in recent weeks. So if retail continues to move higher, XRT along with consumer discretionary, together with all of the other sectors, we could have a nice week in front of us, adding on to that 9% gain from the lows on the S&P 500. As we start the week with a positive delta trade and fading volatility, or VIX, we'll look for these 28 stocks from the IBD 50 to continue higher. Probably a good many of them will be on the watch list this week. We're also watching these stocks that showed up on the relative strength line at new highs scan, the blue dot scan, stocks on the move, and stocks from swing trader alerts, with the one major caveat of NIMO being at such an extreme. ACLS looks good, pushing above the 21-day, testing the 50-day on Friday. AutoNation looks really good. AstraZeneca is following through. It's above the 921 and 50-day. Atcor looks good. What I'm really interested in is stocks that are pushing higher, and stochastics is just coming up from 20, passing through 50. These are the best setups from experience. Looking for a follow-through, especially in stocks related to construction. We're seeing Beacon Roofing, BECN, stochastics rising, price above the 50-day. We're also watching Boise Cascade lumber stocks, seeing a comeback. Builders First Source, same idea here. Stochastics rising, price above the 921 50-day. Looking for the 21 to cross up through the 50-day, the blue above the red. While some of the energy stocks appear to be a little bit extended, like Callon Petroleum, watching for this to consolidate, maybe pull back to the 50-day and give a stochastics time to come back a little bit. Same with Synovus Energy. You can see how embedded we've been. Stochastics been above 80 for 2 weeks. Comstock Resources and Darling Ingredients, the same thing. Looking for some of these stocks to follow through, but for the most part, these energy names are a bit extended. That said, they could continue to move higher given the current trend in XLE, the energy sector. Also watching for stocks like Enphase and the solar stocks to follow through. Nice strong trend in stochastic. We got Encore Wire looking for a follow through here as well. Stochastic's rising, price above the 20 and the 50 day. Green Brick Partners has properties in the Texas area as well as Georgia. Watching this follow through, the home builders should get a bid if the dollar continues to move lower and copper continues to move higher. Jabil Inc. Nice follow through, a flat range as the stock tries to break above the 200 day on Friday, closing near the highs of the day. Looking for a push above these pivots. RSI is rising. MACD has crossed. Volume starting to pick up, and stochastics gives us a green light. That said, look for a follow through Tuesday, Wednesday. The steel stocks were also doing quite well last week. Cleveland Cliffs, Nucor, Steel Dynamics, in this case, looking very strong. Three white soldiers back above the 21 and the 50-day moving average. Stochastics looks very strong. Additional stocks showing relative strength. Many of them from the energy sector. Apache, Cabot Oil, Savitas Resources, Earthstone Energy. All of these very strong last week. Eli Lilly from previous watch list breaking out above the 311 level last week. Halliburton following through. Magnolia Oil and Gas, Occidental Petroleum, Murphy Oil. All of these showing remarkable strength last week. Looking for a follow through this week. Range Resources, Scorpio Tankers, Zem Integrated, Star Bulk. Scorpio Tankers continues its bullish trend. Relative strength is climbing. Volume shows institutions accumulating shares. Keep an eye on the tankers, GNK, Genco Shipping. All of them look good for a follow through. Additional stocks from Swing Trader Alert, VLO continues this bullish trend. Looking very strong. Northrop Grumman looking for the follow through, pushing higher. In addition to the stocks that did well last week, like Microsoft, very strong performance, looking for a follow through. Nvidia, we traded these on Friday for nice gains. We'll look for this to continue again this week if those momentum traders are back again. It seems to me that institutions have been picking up shares at a discount with obvious accumulation on Wednesday, Thursday, Friday last week in Nvidia that accelerated on Thursday and Friday. With RSI showing strength of trend, MACD has crossed and stochastics is rising rapidly. Apple also caught a nice bid. We were watching options at the 145, 150 strikes and 160s. Last week, some of those were zero date options, meaning they expired on Friday, trading them on Friday. We also saw options going out to June expiration, 6/17. So we'll be watching for any kind of follow through in Microsoft, Apple, Nvidia, etc. this week. In addition to stocks like Ulta Beauty with a nice gap up follow through, huge volume on Friday, along with the big box discount retailers like Walmart. Obviously, institutions have been picking up shares. I'd like to see volume pick up a bit, along with Dollar Tree, Target, Costco, Dollar General. Many of these followed through last week. Watching the volume, institutional interest here seems to be picking up as Dollar Tree continues higher. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for May the 30th, 2022. I'll send out a watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, have a great weekend. Start off cautious. We will as well, and we'll see you in the morning. Take care. Ciao.